All right, everyone. Happy Sunday. In this trade breakdowns, I want to go over a few trades I took, specifically these three trades I want to go over. I'm not going to go over how I let the position run or what I do. The main thing is going to be going over the entries. Entries I think is the most important thing whenever looking at the charts. Like how to have that entry where you can make the gains which you want to make. Now, let's go over this one by one now. So this trade, this was a 35 lot buy around New York session, and this came after so before this, I think we did a live stream, and I had a trade. This was a sell I took when the price would continue to push down, but we didn't. We started to consolidate really. So as we start to consolidate, so this is what was happening, right? We consolidate, consolidate, consolidate. And then we ask ourselves that, okay, if we're consolidating around London, the next volume may come in New York session. Right now, I'm not saying that if you don't get a trade in London session, you should switch over to New York session, because you have to master your first session in the beginning, right? So that's the thing. So me, I can look at the New York session because I've been trading New York session for the past 9 years. I've been looking at New York session for the past 4 or 5 years. I've been trading London session, so I can switch, right? And if you're someone who wants to try out a new session, just spend like maybe 3 4 months looking at the session and then see what happens. Now, back to right over here. If you're looking at 30-minute time frame, it started to break above resistance. As it started breaking above resistance, and if you want to take a buy, man, your stop is like 28 30 pips. Now normally I would say that if we're breaking above, you can have a stop somewhere in the middle of a range, but that's a little bit complicated. I would say that's a little complicated way to approach an entry or a possible execution, so I'm not going to mention that here. I'm only going to mention the specific candle entry where this was done. Now let's take a look on the 15-minute time frame. Dropping down to the 15-minute time frame, this is what was happening. Now look, this 15-minute candle, it broke above 33.70, and if you wanted to take a buy over here, you're starting to ask yourself that, okay, look, 15-minute candle had a big body. How much was this body? Look at this, 28 pip body. Next one as well, same, right? 43. This one here, once it closed, it's like a 40 pips. So till this point, 33.70, 15-minute candles have already moved 73 pips. So now you ask yourself a question, okay, if the 15-minute candles have already moved 73 pips, how much more will they continue to move if I take a buy right over here? What if we retrace? What if we don't go up, right? So now there are two things. No, well, there are three scenarios you need to keep in your mind about when price pushes, right? So price is pushed. For you to take an entry, you need number one, a retracement to create support for price to push up. That's the first scenario. Second scenario is if the next candle closes bearish, and you can have an impulse entry for price to push up, trade with the trend. Or the third scenario is the brand new one, which we've been looking at for the past year and a half, impulse entry and trend, which means if a candle body closes smaller, which is indicating that the volume going up is decreasing, right? So volume decreases if we have retracement, we create support. If the candle closes bearish, the same thing, volume decreases. Or if the candle is closing bullish in the same direction, let's say, and the body is closing smaller, you're like, okay, like, you know what? Volume is decreasing. But if the next candle starts to break the high of the previous candle, small body, then it'll be like, okay, like, you know what? This may be impulse entry and trend, and we know with gold, like gold is not something like, oh, we've moved about 100 pips, how much more can we move? And then it starts to move like 200-300 more pips, right? That's the thing. So that's why impulse entry and trend works so well with gold. Like, look, impulse entry and trend, that's where the entry was taken. Once this candle, first of all, this candle was just consolidating, on the 1 minute. If you look at the 1 minute on the chart, it was just ranging, and the trade was taken in the last 5 minutes for price to push up. We pushed up, and then I kept trailing the stops, trailed the stops. That's it. I'm not going to talk about what made me hold the trade or or like, what was done. We're only discussing the entry. Why was the entry taken? Holding the trade, it all comes with confidence. It all comes with legit practice over and over and over again. That's the only way you're going to be able to hold trades longer. It all starts with letting 10% run first, and then it starts with letting 50% run, and then sooner or later you're letting the whole thing run. Okay, let's move on to the next one. This was taken on the 22nd, the next day, and I think we talked about this in the group Discord, or I sent some analysis on this trade. So this was a buy, 40 lot buy, very small trade, nothing major. Looking at the 30-minute time frame, obviously we had that support down there. We also have this resistance up over there. This candle has closed with no wick on the top. And we all know how this goes. When a candle closes with no wick on the top, you wait for the next candle to wick down, break the high, and then move up. Ironically, I closed at a very nice spot. So let's take a look at this on the 15-minute time frame. Take a look at this on the 15-minute time frame, right? 15-minute time frame. This was taken 10 minutes into the candle. Let's move on down to the 5-minute time frame. And as we're moving down to the 5-minute time frame, so take a look at this right over here, right? So look, this is where the 30-minute candle closed and the 15-minute candle closed. Look at the time down there, right? And it closed with no wick on the top. Next, we needed the next candle to make a lower wick. This is the next 5-minute candle. Start of the hour, start of the 30-minute and the 15-minute. This candle came down, bearish. So far, no buys, no buys, no buys. Once this candle start to break its own high, then we're like, okay, now the probability has skewed in our favor from being 50-50 with candle with no wick to now higher probability for price to push up. So that was basically the trade. Took this trade, it ran for about 22, 23 pips, and that's about it. Let's take a look at this one right over here. This is the sell. Okay. So this next one was a sell, 40 lot sell on the 24th. Let's go. This was, I remember this one. This was the sell right over here. This is where, a lot of people took the same sell, I think, with different analysis. So I'm just going to go over why I did what I did. Right over here. So this is a 15-minute time frame, and this was only taken on the 15-minute time frame. Let me move the zone right up over here. So obviously we had a resistance. Price had made a low. And so look, price made a low. Price moved up. And this, oh my God, what's going on over here? What is happening, huh? Oh yeah, right here. So this candle here closed bullish. Okay, so we're looking for some sort of some sort of indication to see whether we're going to continue to push up or we're going to continue to push down, right? Then you have the next candle. This candle right over here. This candle closed bearish. This is still pre-London, I think. And then we had a bullish candle closing right over here. And the next candle then, once you start to break the low of these candles to the left-hand side, we continue to push down. Let me show you this on a 30-minute time frame, right? Looking at the 30-minute time frame, it seems like the entry was taken just because we in the middle of the candle. Doesn't make any sense. So let's move down to the 5-minute time frame. Let me show you this on the 5-minute time frame. Let's go to right over here. Look at this on the 5-minute time frame, right here. This candle start to break the low right here. This is also starting to break the low on the 15-minute time frame. 5-minute looks a little bit messy because you also got some sort of support here to the left-hand side. But if we're only looking at the 15-minute, this is where it would just beautifully came down. Beautifully came down. This was a difficult setup. I'm not going to say this was the easy setup, straightforward. No, it was difficult. It was difficult, and this required some sort of intuition and experience as well, to watching things happen over and over again. I think some guys later on took these sells for price to push down, which was absolutely amazing. Man, to be honest, this was way nicer. This setup right over here. This was way nicer. Let's take a look at the next one right here. So this one was I don't even know why I took this trade. I shouldn't have taken this trade. This was right over here. I was taking the sell. and it wasn't time for me to trade, so I closed the trade. And then later on, I saw, man, I should have held the trade, but things happen like that. But yeah, I think the main one was this trade here, the entry on the 15-minute time frame, and kind of like mixing it that with the overall 30-minute and understanding how gold really moves. I think that was the best one, and also this one right over here, the buy. This one was a little bit complicated, but I would make sure we make notes on these two trades right over here. I hope this was helpful. If you have any questions, you can ask in Discord. But other than that, yeah, I guess we're gonna see you guys on Monday.